All right, good morning. We are here Tuesday, the 29th of March, looking at the euro dollar, the dollar index, and also the euro pound for today. I will also be doing a short review of what we spoke about the Aussie dollar and the Kiwi dollar from yesterday's analysis. But with all that, we have to start first with the disclaimer. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion of myself, the speaker. So please remember to do your own analysis prior to entering any trades. With that, I hope you have been trading well, trading safe. We have seen some dollar strength through yesterday. We saw the US yen actually reach that 125 level as indicated by one of our members in the Traders Club. With all that activity, we actually saw quite a big move across the board with that dollar strength. But now we're seeing some correction or some retracements happening. What to look out for? Let's look at the news first. Here on Forex Factory, right? Today being Tuesday, we did have some Bank of Japan news. In particular, if you look here, we're looking to avoid negative yen weakness. The Bank of Japan offering to buy unlimited 10-year bonds at 0.25%, second day of consecutive intervention, but having a lot less impact than what happened yesterday. And then also, I think one of the reasons was because the PM told the ministers to craft a package as price rocketed. So what else to pay attention to? For today, not a lot of other news, in particular towards the euro dollar. Not a lot of news there. For Wednesday, tomorrow, we do have ECB President Lagarde speaking at 4 p.m. GMT plus 8. What about this is to speak at an event hosted by the Bank of Cyprus. I don't think this will be a big price mover at this point for this event. So possibly could ignore that a little bit. I think that looking at a lack of news for the euro data release or coming from any euro data release, we could actually see some relatively consolidative move on the euro dollar. Also, not a lot of US news to be released as well. Into Thursday, we do have some euro employment numbers to be released, but these are not traditionally big price movers. What you want to pay attention to more is into Friday with the PMI numbers coming from the Eurozone. A lot of PMI numbers, the Spanish manufacturing, the Italian manufacturing, German manufacturing, but overall look at the Eurozone manufacturing PMI numbers, looking to stay at that 57 number. So still in the expansionary phase. I think we will look at it at, I think the data will be released at about 57. So no surprises there at this point. Also with the pound, as we're looking at it, manufacturing PMI also at 55.5, no surprises there. CPI, right? Inflationary target or inflation number for the Eurozone, flash estimate year on year looking to go from that 5.9 to a 6.7%. So very high inflationary number there for the Eurozone. CPI flash estimate from a 5.9 to a 6.7. What this means is that it could actually spur some action coming from the ECB to try and bring the inflationary numbers down a little bit. But with all the uncertainty in the Eurozone, with the Russia-Ukraine borders conflict, I think that despite a higher CPI number here, we might not see much news or much action from the ECB. And then on Friday, we do have the non-farm payrolls number from the US, looking to go from a 678K to a 485K. I think we'll see maybe 450. We might see a bit lower than 485 here, I think. We've seen that the non-farm numbers have been very strong, over estimates for 2 consecutive months already. So I think that we might see a bit of a track back down, a bit of a retrace back down in terms of the non-farm number. But the main things at this point now for employment numbers from the US is actually to pay attention more towards the hourly earnings, the inflationary numbers, looking to go from a 0 to 0.4. So wage inflation looking to increase there, and unemployment rate looking to drop from a 3.8 to a 3.7. So I think later into the week, we're likely to see that dollar strength come back into play. So with all of that, what it means is looking at the dollar index here, the last we spoke about it, we're saying that at that 99 level, I was looking for it to track up towards that 99.50. It came as high as 99.30 before retracing back down. Sitting in this consolidation here, likelihood is that we're going to see it sit across. I think it might track a little bit lower, but I doubt that it will get to that 98.46 level again, like what it's been doing over the last couple of weeks, because there hasn't been very bad news or no big surprises coming from the markets at this point. So I don't think it'll drop that much. I think it'll sit in consolidation before tracking back up. So lowest it'll go is probably towards 98.80. I think it'll get to 98.80 before tracking back up again. So what this all means is that if we're anticipating some dollar, okay, let me just do that. If we're anticipating, with non-farm payrolls coming out, we anticipate that push back up towards that 99.50 level. So what it means is that anticipating some dollar weakness for the short term, for the very short term, from now till Friday, and then with the non-farm payrolls numbers anticipated to be quite positive, we could see the dollar strength come back into play. What this means is that looking at the euro dollar, it's bounced off, right? It's bounced off this 1.0945 level once, twice, 3 times, 4 times now. I think that we should not be looking for it to break past that point. I think what you could be looking for is a short-term move towards that 1.1074. I don't think it'll go all the way there, but towards that point before tracking back down again. So in terms of arrows, what you could be looking for is a move towards 1.1032 and then back down again, possibly towards that 1.09547 level. In terms of trades, what to look out for here will be, I'll zoom this in a little bit, will be either to look to buy now, a very short-term trade, something that you want to manage very closely from now, about a 20 pip stop loss just below this candle low and towards the 40 pip take profit level towards that 1.1035 level, the recent high points currently at this 1.0995. So this will be a short-term trade, something that you want to manage very closely, just riding on this possible upward move for the euro dollar on H4 time frame. Later into the week, I shall move this. Later into the week, you'll be looking at that tracking lower on the euro dollar with the non-farm payroll news to be released. What I'll do for all Traders Club members as well is that I'll be doing a non-farm payroll analysis. I'll be recording that and I'll be uploading it into the club so you can check that out. But what we're going to do is do that later onto Friday, just so that we have the price movements play out so that we identify immediate trades that we can jump into. So if you're watching this on YouTube and you're not already a club member, make sure you get onto the club so that you get the latest updates on the non-farm payroll news or any other news events and possible trade ideas that we have to share with club members. So for euro dollar, again, short-term trade will be something to look to buy. I think let's be a little bit safer here. Look to buy above that 1.10 level. So wait for it to break above the 1.10 round number level, 40 pip take profit level, 20 pip stop loss, a 1:2 risk reward ratio towards the upside for the euro dollar on the H4 time frame. With that, for the euro dollar, what you could be looking at on the euro pound, look at how the euro pound, we've been talking about this 83 round number level. It's bounced off, it's broken above 83.50, it's approaching that 84, it's hit and consolidated 84 level. I think that if we see the euro dollar push higher, then we could see the euro pound push higher as well, right? But this is all dependent also onto what the pound dollar is likely to do. If the pound dollar does continue higher, then we're going to see that sit at this point, same like what it's been doing since early March. It's been sitting there fluctuating up and down, but I think that it's likely to push higher, like what it did on the 15th of March and again on the 18th of March. What you could be looking for here on the euro pound H4 time frame is for a buying opportunity above 84.15, about a 40 pip take profit level, a 20 pip stop loss just below that support level, a 1:2 risk reward ratio towards the upside for the euro pound. But this is a trade that you need to wait for a little bit more because it needs to consolidate and possibly break above that resistance level before you have that buying opportunity. All right, with that said about the euro dollar, an immediate trade likely. The euro pound, something that you want to wait out a little bit more for. Let's look at what we did on the Aussie dollar yesterday. I was saying that it was going to test this resistance level of 75.40. It did that and it tracked all the way down towards our first take profit level of 74.65. I think that we're going to see a bit of a retrace. If you didn't jump into the trade already yesterday, I think we're going to see a retrace, possibly back towards that 75.22 level before tracking back down again. So you've missed the first chance, might be a second chance coming around again. I think that it will come back up before turning back down towards the first take profit and possibly even towards the second take profit level of about 74.21 at that point. So that's the Aussie dollar on H4 time frame, and then also the New Zealand, the Kiwi dollar. That one happened straight away. It broke below that 69.32 level. Right now, still, it went to about a 68.88 level. Now bouncing back up again because of the dollar weakness that we are seeing, tracking back down, that correction, that retracement happening at this point. I think that it will possibly push a little bit higher before coming back down again. Again, if you miss that first trade, opportunity for a reload and a retrade of this Kiwi dollar is likely. So look out for it, look for it to move higher, bounce off that resistance and turn back down. Again, another selling opportunity there for the Kiwi dollar. With all that said, I hope you, if you have any questions, put it in the chat, or if you have any questions, put it into the club platform. We have started sending out the signals as well. So, what you're going to do with the signals on the club platform is use it as another way to identify opportunities in the markets, do your own analysis, but we're monitoring the market. So we're just sounding out possible trade ideas to you with the signals that you want to pay attention to and do your own analysis, and then possibly jump into the similar trades that we're getting into. With all that said, I hope you trade safe, trade well. We'll talk about the pound tomorrow, and we'll see you tomorrow. Oh, and tonight for Traders Club members, make sure you join the session tonight, 8 p.m. GMT +8. We will be going through shorter term trades. I think that with the way the markets are moving, we're likely to see a bit more movements later tonight. So we possibly might be able to get into some live trades together as well. So see you tonight for Traders Club members, and for everyone else, see you tomorrow for the pound dollar. Take care now. Bye-bye.